Hello and welcome to FinTech Impact. I'm your host, Jason Pereira. Today in the show, I have Marc Pickren, CEO of the Americas for TurnKey Lender. TurnKey Lender is a SaaS solution to allow for business lending. And with that, here's my interview with Marc. Marc, thank you for taking the time today.
Yeah, great to be here. Good morning.
Yes. So Marc Pickren of TurnKey Lender. Tell us about TurnKey Lender.
Yeah, so it's kind of a strange story. About 4.5 months ago, I sold another software business that was a marketing automation software for small business. And a chief banking officer friend of mine at a publicly traded bank had called me up and knew that my previous experience had always been in kind of the digitization of different lending platforms prior to this company called NationStar, and then eventually rebranded as Mr. Cooper. And so I didn't have anything to do at the time, and I thought it would be really cool to be able to do the same type of digitization that we did at the previous company. And I started looking around at loan origination systems, loan management systems in the marketplace, and happened through an investor friend of ours, ended up getting in touch with Elena, who is one of the co-founders of TurnKey Lender. Short story, even longer. She and I had a conversation a few weeks later. I kind of came on board as an advisor / unpaid CEO for a few weeks to try and see if there was a good relationship there, and then eventually accepted the position as CEO for the Americas, with the goal of moving our headquarters eventually, most probably from Singapore to the United States. So it's an international company. Love to talk to you a little bit about that as well.
Okay, so we will jump into that, but essentially talk to me about what it is, or what was the origin of TurnKey Lender? What was the problem they were trying to solve for in the marketplace?
Yeah, so it's a global company, as I mentioned before, 180 clients, 50 countries, over 50 million people on the platform. And it was founded really to solve a big challenge, and something that's even looming heavier, which is the democratization of finance. For those of us in North America and even other parts of the world, obviously, the idea that you go to the store, you pick the product that you want off the shelf, and you run a credit card, and second later, as you're walking out of the door. For a large part of the world, that reality doesn't exist. In fact, the idea that anybody would store electronic money on a card that you can use anywhere, that's linked to your bank account, that's linked to your employer, is a completely foreign, idea. And so some of our original products actually focused in Malaysia in terms of helping underserved communities establish business credit so that they could launch micro businesses. And the way that they solved that was by creating an algorithm, a scorecard that experimented with everything but the driver's license / credit bureau report. Because in many of these countries, like Thailand, there's 3 different national IDs. And so how do you establish A, that you're dealing with the right person, and B, how do you figure out a way to find out whether or not loaning the money is going to end up being a positive event? And so that was kind of the impetus, more of an altruistic kind of scientific experimentation, if you will, that then all of a sudden those algorithms started being needed in other places. There's one of our clients just went public. Didn't go public, just got $1 billion unicorn evaluation, raised $130 million on their B round, named Isusis, and they operate on our platform. And so, this democratization of money is really, and finance is really, I think, something that is catching on globally.
Well, it makes sense, right? If you see an opportunity within a nation for some form of alternative lending, or you have the audience or whatever it is, you can always try to build it all yourself from scratch, but being able to count on something that's proven to work in multiple jurisdictions and, by now is tackled. I can't imagine how many little nuances of how different countries do handle things differently you guys must have had to address to be able to solve it in this many countries already. And that kind of institutionalized learning, basically, when you encounter a problem in a new country, odds are you've seen that trick before in a different way.
Yeah, we're seeing a lot of, first, the reason why we originally based out of Asia Pac is because the kind of end of currency digitization of wallets and telecommunications is much further ahead in some of those countries. Like in some of those countries, you never really see anybody exchange paper currency, right? It's all electronic. It's all through the phone. And in America and the Americas, that's starting to catch on even further as there's this great race towards the wallet. But back to the, kind of democratization of money, of finance. Yeah. I mean, it's crazy. The regulatory and compliance environments in some cultures, religious prohibition, prohibitive on lending or borrowing money. You're dealing with all different types of situations. In the Malaysia or Thailand instance, you're dealing with three different, IDs, like who is the real Marc Pickren in Thailand? I don't know. So bringing together and building that kind of knowledge base. But ultimately, if you think about it, instead of like a credit report that is pulling in very base level information about an individual, but isn't really giving a 360-degree view of that person, a lot of people carry a lot of cash in there that could be incorporated into the decisioning engine as to whether somebody's credit worthiness. And there's all of these other signals and clusters in terms of analysis. And I'm not smart enough to have that conversation, but there are so many more available inputs. One of those being a lot of the telecommunications companies. We have two currently, hopefully a third, serving over 50 million folks that are borrowing money through their mobile device. And if you think about it, a lot of the world has push button phones. How do you solve for them being able to obtain a $50 or $100 loan? Because they're caught somewhere and they need to catch an Uber home, right? They need a ride home. And so a lot of the telecommunication companies are now seeing that since they have the wallet, they have the stored credit card, their life's remote control, why wouldn't you now turn yourself into more of a digital bank, particularly for those populations that are unbanked?
Yeah, I mean, it's, they already have the distribution settled in some of those areas, right? But, these challenges you're talking about, it's, the foundational stuff of push button phones versus smartphones, it's something that didn't even crossed my mind, but absolutely true. So, and this has had to be tackled in different countries in so many different ways. So I guess the real question to that is, you've seen all these tricks. How much would you say are like what are the biggest common challenges? And what do you say the most kind of bespoke challenges you've encountered thus far?
Probably for us is there's two terms that kind of define our business. One is embedded lending and one is banking as a service. And so you've seen this evolution of like the buy now, pay later. So let's say that Amazon and both Target have signed 1-year agreements with a firm, a third-party company. When you go to see your local veterinarian and or doctor, you probably have seen a sign on the counter for a company maybe called Care Credit. These are finance companies that exist in the endoplasmic reticulum. I always love that word. It's the only one I retained in science class, but the outside kind of entities that have sat fat for 100 years on top of controlling how consumers access money, right? And then you have this explosion of like, okay, well, now I'm a small business. Now small businesses got squeezed, pretty heavy with COVID. So now I need to start looking at where can I cut operational efficiencies, create operational efficiencies so I don't have to, because I'm going to have to pay people more and it's going to be harder for the next little while. And then all of a sudden they start noticing that there's about roughly 4% of every credit card transaction that goes to a grouping of random companies. And these are basis points, right? Like we don't think about like 25 basis points, that's 0.25%, whatever, right? As a consumer, maybe. Now with inflation, who knows? Maybe we start analyzing those 4% even more as well, since rates in the United States have gone up above 7 in terms of inflation. So anyways, the point being that like you have all of this disruption. I mean, since like digital lending's been around since 2014. The band Magic had the top hit Rude. That date, like digital lending has been around that long. You have 2022, and now all of a sudden, all of these companies are realizing, well, how has the automotive industry survived? All they are is a finance company that just happens to sell cars. And that model's going away. Like Carvana, like I recently purchased a car completely over the phone, didn't fill out anything except something online, had a card delivered to me within 3 days. Like, so all of the traditional means, walk into your major bank today and say you want to start a small business and ask for a loan. They will hand you 2 credit card applications, one personal, one business. Like there is no, in a lot of those companies that you see on every corner. So you have this huge disruption. But the challenge is that everybody thought that like Prosper and Lending Club, since finance was such a crazy, like hard to figure out thing, right? Like people loan you money and you return it in terms of interest income. Wow, what a concept, right? Mm-hmm. Like, so they thought that they were just going to, like the lending clubs and Prospers were just going to proliferate and it was going to be the end of kind of like finance as we know it. But what they didn't figure out was like, you could come to a company like TurnKey Lender and you can have application, decisioning engine, underwriting, servicing, and collections all handled digitally by some really smart college grads that know SQL. Like, so that's kind of where we decided, like, why don't we build the AutoCAD of lending to where, with some good time and training and spending time with it, you can modularize and you can create workflows and configurations to basically build any type of loan that you want. You can have loans that have bullet loans, which have you borrow $30 and you pay $1 a day. I mean, a million different type of loan products. And you could be my friends up in Canada, DeFriends. You could be an Ashley furniture retailer. You could be a community development organization that is trying to loan money to people, underserved populations, to start businesses. You could loan money to any Fortune 500 company or any bicycle manufacturer in Salt Lake City, Utah that wants to finance a $2,000 custom 10-speed bicycle. So we exist to solve that problem of getting across the fact that lending is something you can do in Excel in about 5 minutes. You can determine about 5 different profitability scenarios. Now, the problem that we're solving for our clients is a little bit different. You'd be surprised at how few of them talk, especially at the enterprise level. So John Deere and Caterpillar compete in the same space. Caterpillar has what I understand, a pretty sophisticated lending module to loan money and to be an embedded lender for their own, for their dealers and to sell their product, because they can then create, and John Deere has one as well. But a number of companies, they use third parties to finance their products, including anybody that uses a buy now, pay later platform. The number one reason why most people are coming to us is because of customer data. They don't want to sell their customer to, in the case of Care Credit, you're selling it to Synchrony. So I think the biggest challenge that we're solving is just explaining that lending is not something that people should be afraid of. They should embrace because of the multitude of positives that come from it.
Well, that makes a lot of sense. I mean, at the end of the day, the lending capacity or the lending apparatus is an unknown to them, right? You're solving for that problem. You're giving the same net functionality, but the bigger, going back to why you think what your statement about the giving away their data. Yeah, that is short-term benefit in terms of the lending and a long-term possible disruption of their own industries, because they're giving, those companies are compiling that in a very large way from the use of it, possible resale, repackaging of it. And, there's been more than one example of companies moving into other sectors of the economy based on data that compiled on third-party vendors that they were servicing. So it's I'm one for understanding where the appeal is and being able to control for that. So that's basically what you're selling. Talk to me about the experience for the vendors in dealing with you. So is this kind of a consultative process where you go in and kind of sit down with them and figure out where the lending solutions are, figure out what to bring to bear? Is this more of a packaged solution at this point where there's not, for every jurisdiction, you now have it more or less out of the box? How much of it is it from pure bespoke to completely off the shelf at this point?
Yeah, that's probably the biggest challenge that we're solving in 2022 is moving from, so we have 2 products and we're reformatting our homepage. Unfortunately, we're not a huge company, so we're still keeping one website. So we have one website that serves, basically it's written in English, other languages, and it serves kind of the globe. And we're kind of doing our homepage to make it much more simple in terms of understanding us as a company. Because even when I go on investor calls or financial sponsor calls or client calls, you can spend 20 minutes of your PowerPoint with lots of words and graphs, and people still don't, at the end of like the last 10 minutes of the meeting, somebody raises their hand and says, I still don't know what you do. So we're trying to simplify in terms of our positioning. And number one, we do have a box product, and that is very set. in terms of marketing to where it is more of a single credit policy, a single type of loan product that usually runs about $50,000 or less per year. And then we have an enterprise edition, which really is segmented into like consumer and commercial being OEM manufacturers. So let's say that you're a manufacturer of aluminum structures, right? Currently, let's actually use a tractor example. They're cooler and people know tractors a lot more. So let's say that you're a farm equipment company or a builder, a commercial builder, and you have the opportunity to bid on a project, but it would require that you increase your tractors by 10. So you go to the different tractor companies, and some of those companies offer in-house financing to where you could buy those 10 tractors on the spot, develop terms, sign service contracts, and that customer now is checking in. You're now cutting a check every month to Mahindra or whatever, Caterpillar. In the other scenario, you're a manufacturer, you're a little lower on the tier, and you have a dealer network, which others have dealer networks as well. But you hand the guy or girl 5 pieces of paper they've got to fill out, then they enter those into a system. It goes out to like 25 different specialty finance companies. Now your social security number, your credit history, your bank's financial history, it's been weeks because you've been dealing with Barbara at the finance company trying to satisfy their underwriting guidelines. They send it out to the market and the highest bidder finances your project. Well, first of all, that specialty finance company doesn't have the ability to fully value the product because they don't manufacture it and they're not 100% in the business, but let's say they're smart. The whole point is you just sold your customer. That third-party finance company has no loyalty to you when that next order for 10 tractors comes in. They could order from any other brand and you wouldn't even know that they were expanding as a client because you sold your client to somebody else. And so I think for me, solving the whole idea that a single company can retain that first party data and build the loyalty for resale is something that is probably the most important piece of what we do, even if it's a technical department that's running the RFP and they don't look at the customer loyalty piece in the same way as they do the technical specifications. But ultimately, the smart CEOs and CFOs of the world are, quite frankly, I mean, it's the strangest business. One of the things that attracted me to TurnKey Lender is we get like big brands like H&R Block that like find us via the website. We have a direct selling organization that we're building, but quite frankly, it's kind of by osmosis. Like people are searching us out. And I know that sounds weird. It's not a huge amount of people, but once a month, we have some sort of major corporation call us and say, hey, we're thinking of doing this. Can you guys help out? And we're like, yeah, we can absolutely do that. So it's been, I think the need is so out there. The TAM is so big. We've got to further find and define exactly who we're going after. And if your next question was, who exactly are you going after? I could name off about 6, but I don't want to commit myself 6 months from now and looking back and saying that I said those 6 and they all turned out to be disastrous. So we're still in the research phase, but we do have clients across everything from banking to factoring to, I believe, halal lending. So Islamic, ways in which we can support different communities that don't have access to capital and have unique laws in terms of how they borrow. So we'll work with anyone and anywhere to try and solve their kind of lending credit challenges.
I'm curious, how much does the appetite for risk within the companies you're dealing with impact their use of your tool? I mean, I would think that first off, anyone who's reaching out to you is basically saying to themselves, we need to get into the financing market of this because either A, we're giving away too much business, or B, we're losing business because there's a point of sale issue where people hit the check or, we're ready to sell, but oh no, they need to go get money elsewhere. Maybe they don't come back. And with that, each of them has to answer their own unique risk profile for just how creditworthy the borrower has to be before they're comfortable lending to them. So the question becomes, how much of their risk profile impacts their willingness to work with you, or the scalability of what they're doing with you?
Yeah, I mean, I think it's each company's kind of balance sheet perspective that identifies their approach to the secondary, which would be kind of the wholesale or the secondary market. And so I know a number of different providers securitize their like some healthcare lenders that lend to physician offices, do their own lending. They balance sheet it for a short period of time before they then sell it into the third party. And we stay away from that side of the house, like how people choose to leverage their financing. But if you're an OEM manufacturer, you're typically going to balance sheet it because let's say you're selling something for 100, you make 30 on it. 70% is interest income over 5 to 10 years, you might as well make that interest income over 5 to 10 years. And the way that the systems have been able to, particularly like our decision engine, the amount of data on people that can make a private credit decision based upon very advanced machine learning rules has improved so much that fraud and even failure to pay has been minimized in such a way that they can manage that downside exposure. I believe even through credit products, they can buy insurance against that. But what is the upside? Like if you're a major furniture retailer, well, here, I'll even give you an example. We have a current customer that's a $2 billion JM Bullion. They sell gold and silver online, a couple $1 billion a year, I believe. And they're owned by a well-capitalized private equity firm, a holding company. But working with companies like that to be able to expand at the end of an order, a market price decision. So if you could buy now, pay later on a product if you can buy now, pay later, if you spend an additional $500 at current market rates today, you can just even simply create sales velocity without charging any interest, right? You can just by allowing payment options, you can increase sales velocity. And then if you're like Target, you're trying to build wallet, right? You're trying to have the Target wallet be something that you're regularly using on a weekly basis because that cash is now held in an interest-bearing account by the corporation, and it also allows to track spending habits, et cetera. And so somebody like that, Target could offer their own buy now, pay later to a certain segment of customers. But you do get to one really difficult point, which is like if you're dealing with a situation where there's always going to be, if you needed to do it, there are subprime to prime sub lenders that will do loans down to lower credit levels. So if you were in a situation like a veterinarian and Care Credit turns you down, which is owned by Synchrony, a huge credit card company, you could partner with a third party that would ensure that no matter what the lender's kind of position is, you're willing to lend, particularly like in a healthcare situation to where somebody's life could be on the line or your pet's life could be on the line. The vet could choose to finance those customers, knowing what they're kind of getting into and being able to create some custom payment plans that allow the customer to pay them back. And cell phone data is one of the biggest ways that you can actually tell whether somebody is a good credit risk or not is by how they use their telephone. And a lot of the telephone data is available, not in terms of conversations, but do you call family within a 25-mile area? Are you stable in terms of the times of day that you make phone calls? Have you always paid your bill on time? Because the remote control of our life is the mobile phone, and the last thing that anybody's going to stop paying is their mobile phone bill. So it holds the most data relative to helping to customize solutions for customers.
Yeah, fascinating. So before we wrap up, there's 3 questions I ask everybody. First one is, if you had one wish for something to change in your company or the industry as a whole, what would it be?
It's probably for the company. It's, I use Smartsheet. I have a 62 bullet point 100-day plan. And a lot of it deals with the simplification of the product in terms of being able to make it more understood by more people, because the democratization of finance is a meaningful and worthy cause. And so if we can create a situation to where it's almost like bought off the shelf, we have more people coming to us from different parts of the world, and it's able to be downloaded and utilized in a fairly quickly manner, that would be ideal. The industry itself, continuing to monitor, and as laws have been passed, I'm not a political guy, but occasionally I think they pass some decent laws. And one of them is to minimize the finance charges that companies can charge customers. So the side of lending that has always carried a negative connotation, I would like to continue to not have that be prevalent and or exist. It's a pipe dream, but there's always people protecting, kind of predatory lending. But in our charter as an organization, we refuse to work with, like we get inbound leads from hard money lenders that are, no offense to them, there's good quality folks out there, but people that are loaning money at obscene interest rates and taking advantage of the consumer, perhaps in a moment of need. That's the side of the business that we're prohibited from working in, but I wish I didn't have to ever address it and then lastly is, obviously like everybody, like inflation's creating a lot of disruption in our economy and it's impacting a lot of folks in a very negative way. And how do we kind of right set things so that everybody has an equal opportunity to thrive and be successful in the country? So I would say that those are the things that most probably keep me up at night.
Well, not excellent, but no reason for concern. The second question I have for you is, what's been the biggest challenge in getting the company to where it is today?
We didn't have a super developed sales channel. The way that we obtain customers is largely through marketing means, organic search. And so we've recently taken kind of a approach of creating more of a direct and non-direct hybrid model. And then obviously finding people is hard today's economy. So making sure that I come from a background of both enterprise and direct selling. And it's funny, you think the direct sellers would make it really easy transition into an enterprise salesperson that's less direct. So going from 100 dials a day to 20, but it's actually harder because it's a different breed of human being that's been wired differently. So continuing to build out our sales channel and to make it so that we can bring it 1970s songs, Doobie Brothers, taking it to the street. We can make this thing as massive as it can be in as short a period of time because there is competition in the marketplace and there are dying industries that could be thriving industries if only they would embrace banking as a service, embedded lending.
Like I said, between the increased margin on that, but more importantly, the not losing a sale, because essentially now encountered a financing issue and maybe the access or the friction of that loses that sale. Totally see how that can be a massive turnaround to a business. And the last question I have for you is, what excites you and keeps you getting up every morning to keep on fighting the good fight and working on what you're working on? Because it's creating this kind of change is not easy.
Yeah. So we have about 200 employees. We have about 130 in technology and about 70 in sales ops and marketing and more traditional SG&A type roles. And so it's super fun because I have meetings at 8:00 at Singapore and I'm talking with folks early in the morning in other parts of the world. And we've seemed to be able to have created kind of this concern for the company and this family in the company. For me, I sold another business about 4 to 5 months ago after about a 3.5 year kind of fight to turn around its unit economics. And what attracted me to this position is the company and the product and the health of the organization. We grew at 350% last year through osmosis and through some of our top sales folks. So I think what gets me up in the morning is the fact that I've got a 62-column smart sheet in front of me for my first 100 days, and I can start in the morning and I can just continually go down the process of clicking into those different initiatives and try and reach out and make some change with the folks that are associated with them. So if you're an entrepreneur out there, I'm over 50. So my son calls me a boomer, even though I'm Gen X. So I'm put that on the record. But, as an entrepreneur, you've got to learn that you've got to meet the client where they want to be met, not where you want to be met. And you cannot have and be successful in this business if you have a sense of entitlement. What the half-life on experience right now is about 2 years. So whatever you did over 2 years ago is worth about half, and 2 years from now, it'll be worth nothing. So the constant accumulation of information and doing that is the best way that you're going to be able to be successful as an entrepreneur, at least from what I've seen.
Well, I want to thank you very much, Marc, for taking the time to explain what it is you guys do. I wish you nothing but the best of success.
All right. Thank you. It was a pleasure. Good morning.
So that was today's episode of FinTech Impact. Hope you enjoyed that. And if you enjoyed this podcast, please leave a review on Apple Podcasts, Stitcher, SoundCloud, Spotify, wherever you get your podcast. Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.